The world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, FinTech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. SME banking is a particular interest of mine, as longtime listeners know. We've covered it from a number of angles on Rebank, including challenger banking with OakNorth, digital lending with iwoca and Spotcap, payments with GoCardless, and support services with Xero, just to name a few. If one area of FinTech has been getting increasing interest lately, it's SME banking, and it's about time. Last week, Pool A of the RBS Capability and Innovation Fund was allocated, with massive cash grants going to winners Rebank, Starling and ClearBank to enhance existing business current account offerings. The cash injections are sure to shake up competition in the space. Today we're joined by Richard Davies to talk through recent developments and the broader trajectory of the space. Richard runs business banking and sits on the executive committee at TSB, the UK's seventh largest bank, depending on the metrics you look at. If you enjoyed today's episode, please take 30 seconds to leave us a review on iTunes. Thank you very much for joining us today. Please welcome Richard Davies. Richard Davies, welcome to Rebank.
Great to be here.
Maybe we can start with a quick intro. You and I have known each other for a little while now. You're an SME banking guru here in the UK with quite the track record. But for context for audience.
Yeah, sure. So thank you for saying guru. That's very kind. I've worked in the SME side of things for over a decade now. Initially, I was a kind of for my sins management consultant, but then got into Barclays and initially did some strategy work, then moved into the client side, both small business and then large corporate. Then actually went to OakNorth. So I was the original CEO at OakNorth, which was really interesting going through the licensing process there. And then went to HSBC, where I was Chief Operating Officer for the UK Commercial Bank before being Global Head of sort of digital for their SME operations. And then I came to TSB about a year ago to run the SME bank here. So yeah, very much SME is the core theme through that career, and with a real interest in, I guess, trying to change and improve the industry.
Yeah. Well, I think we have a lot to get into there. The SME space is kind of increasingly hot at the moment, not least because of late last week's announcement of the winners of Pool A of the, see if I can get this right, RBS remedy package, the capability and innovation piece, this massive pot split into 4 pools, I believe, across banks and FinTechs that's looking to basically fall out of, post 2008 financial crisis, government intervention, RBS, effectively undermining the competitive position of RBS in the SME banking space. And the winners, as announced, were the biggest chunk, 120 million to Rebank, 100 million to Starling, and 60 million to a kind of joint proposition between ClearBank and Tide. What was your immediate reaction when the news was announced?
Yeah, so, I mean, clearly we had bid for it. That's not a secret. So we were disappointed, I guess, as ourselves. I do think for the industry, it's a great thing there is so much focus on SME right now. I mean, having worked in this for quite a while, the thing that's always been disappointing is it's always been the poor cousin behind retail banking and investment banking, and to see like real focus on that is just great. So kind of, I am really hopeful that the money is put to good use and really does drive amazing transformation. Yeah, from a personal point of view, we would love to have one of those grants and used it for massive benefit for customers. So I think I'm sort of pleased for the industry that there's hopefully some change going to happen. And yeah, very keen to keep playing a role in that.
So there were a couple other I guess Clydesdale being the main kind of name that comes to mind. They kind of sit right below the big four who didn't win in this round, put in for it but didn't win. Co-op as well. Do you have views on reasons for why it was more challengers winning than established?
Yeah, listen, I think we probably all position ourselves as challengers, though. There's, I guess, you kind of digital new entrants versus you kind of more traditional challengers. I think there was, a lot of surprise that neither Clydesdale or us kind of was awarded. I think we don't know what's behind that. There was an interesting article in the FT last week which actually said what a hard decision the whole thing was before it was made, which I think is pretty fair. I think there probably weren't any just totally easy choices. And I think there was an interesting article over the last 2 or 3 days sort of speculating about the reasons people won. So I have no insight, I'm afraid, beyond what's in the press. But I think it was in the Times talking about the market share promises being made by the people that did win, which are pretty punchy. I think sort of roughly 8% each, adding up to about a quarter of the market over the next 5 years, which certainly would be very disruptive if that does come to pass.
Yeah. So the winners have proposed basically winning a 25% market share in this space. Do you have a sense of what the TSBs and kind of the Clydesdales and co-ops currently hold of that market segment, and therefore how realistic those?
Yeah, I mean, if you look at TSB, we haven't been able to invest historically in our business banking offering since we split from Lloyd's. Until we moved to our kind of new platform, we were sort of tied into what we had, and we very much sort of maintained about 2%. I think Clydesdale has grown recently. They've had probably the leading current account offer sort of over the last 2 or 3 years. And I think they're about 4%. I think co-ops 1-2%.
Wow,
it's probably about
6-7% in total. It sounds like. Interesting.
And I think, listen, there's all sorts of reasons how you can compete more, and I think we certainly would still aspire, even without the grants, to be doing quite a bit more than we do today. And we're investing. So last year we invested about 12 million quid. We'll probably invest about the same again this year of our own money purely, which can certainly get our market share up from where it was and do some great things for customers. A quarter of the market does seem challenging. So I think the Times kind of outlined in an article over the last 24 hours. So yeah, I mean, I guess I hope for the industry that comes true, but certainly it's probably unprecedented.
Well, I mean, I think that topic is a good entry point into a broader conversation around kind of the strategic implications for SME banking in the UK. So they're kind of different institutions have taken different approaches, everything from incumbents building kind of standalone digital type propositions to new challengers. You mentioned OakNorth before. We actually connected with Rishi Khosla recently in an episode that'll either go out just before or just after this one, I think. To businesses, more kind of quote unquote fintech businesses that haven't gone the banking license route, that are looking to optimize on integration between transaction account and cloud accountancy or other types of business expense management. So I don't know, from the standpoint of you at TSB, but more broadly you as an experienced SME banker in the UK, what are you most excited about in terms of what you're seeing, and what developments do you expect to be most relevant?
Yeah, I mean, I think the most exciting thing is choice, actually. I think if you look at this market historically, it's been characterized by very little choice. You had the big incumbent propositions and not much else to choose from. As we did mention, kind of a couple of other challenges that have been around. But the market is extremely broad and diverse. The hairdresser that cuts my wife's hair, who kind of goes around people's houses, doesn't have premises, to the freelancer kind of working in IT, to the person running a manufacturing company, to the coffee shop. These are like extremely different businesses that all are in the S of SME. And having a handful of one-size propositions for that is not great, actually. The market needs different choices out there, which I think is the thing I find most exciting personally that's going on right now across fintechs and banks is just people focused on this space and they are offering choice. I think the opportunity for data is the thing beyond that I find definitely very exciting. Like, how do we use the greater sources of data out there to both optimize customer experience, to optimize lending decisions, optimize fraud. And some of that stuff's been done for a while, but I think you can move it to a whole different level right now.
I think that's, it's an interesting point and a helpful one to describe the complexity, if you will, of the broader SME segment, which is probably mischaracterized as a single segment, right? Because it kind of feels like there's more differentiation across the micro business to the 100 employee manufacturing business than there is across almost the entire breadth of the retail market. Yet you've got hundreds of different propositions looking at retail customers, kind of very specific about the problems they're solving, split by the affluent, mass market, high net worth, ultra high net worth, and all the rest. Whereas in the SME space, it's kind of, we're an SME proposition. That doesn't necessarily mean that much. How do you guys internally at TSB think about that?
Yeah, I think that is a really good question. I mean, we have a core proposition that we are in the process of relaunching right now with a whole bunch of kind of great new features. And we are starting to set ourselves up there to do your core micro enterprise business rather than to go deep into a sub-segment speciality. I think because we have a brand that's 200 years old, we have quite high awareness and consideration for our offering in the market. So if we try and be really super segment specific, then actually it's not going to work for us because people are kind of wanting a broader offering. I think what I'd love to see is some of the more niche providers really then targeting individual subsegments. I guess one of the things that feels like a very unserved market is people, the real micros, that many of whom historically have used their personal account for their business because it's really small, doesn't have employees, they don't want to pay the charges on a business account. Addressing that, maybe 1.5 million of those in the UK. I think you see some of the neobanks targeting that right now, and that's something that hasn't been well served in the past, and a great example of how people can go and really help an underserved segment.
We kind of started out by talking about how there's been kind of a recent push around the SME space, and in my view, the main driver of that is technology as much as anything. Suddenly, it's possible to service businesses with low turnover, low in traditional kind of commercial banking terms, low volume borrowing needs in a profitable way, right? Because you're with kind of tech enabled efficiency, you're able to kind of deliver on that in a meaningful way. And I think that if I kind of flip over to the retail side, because I think most would agree that there are interesting similarities, certainly differences, but similarities, and then there ends up kind of being some flow through from retail customer experience to SME customer experience, sharing of best practices and all the rest. On the retail side, I think we're starting, because of the availability of new technology and increasing openness of data sources, to see a bit of kind of an expansion beyond the traditional, bank just provides transaction account and maybe some traditional banking services, and you're getting digital banks starting to push propositions that maybe loop in utility providers, or kind of get you started on a third party mortgage application more quickly. And I think a number of digital banks have even broader aspirations around pulling in parts of the value chain, insurance, maybe making an insurance claim that kind of traditionally sit outside of the banking interface. And I think there's opportunity for a lot of the same type of thinking in the SME space, and you mentioned things like digital marketing. It's like what services are most relevant. Can you, using great technology, almost centralize some business services and start to offer them to clients. Maybe it's around accounting, maybe it's around HR, maybe it's around payroll. Is that the way to go, or is it, I don't know, are there more interesting opportunities around kind of integrating accounting into banking and making it kind of a one-stop shop from that standpoint? Surely you guys have done all sorts of strategic thinking around this. Where do you see as the natural, kind of the lowest hanging fruit, natural extensions for the traditional SME banking proposition?
Yeah, I think there's always been extensions of banking services. I mean, insurance has been the classic one for decades, I guess, in terms of banks trying to help also provide insurance. I think for me, the most interesting one is accounting. I think trying to get in things like HR, legal, yes, it kind of sits there, but is it really something that the customer expects from their bank? Don't know. I think the thing about accounting is it's the same data, like debits and credits in the bank account, in the accounting ledger. It's basically the same data. I mean, it's something that Xero has led the way on in terms of getting data feed set up, and I guess was their USP for quite a while, to get the bank data into the accounting software and then put some machine learning on it to get the auto reconciliation of that into the accounting categorization, and therefore save a whole bunch of manual bookkeeping work and allow the accountant to be providing more value-added advice. I mean, it's something, as HPC, I did a lot of work on getting Xero data feeds into a bunch of HPC countries to, like Hong Kong or something, enable the market there, which is extremely paper-based and bookkeeping-based. So I think that integration of accounting and banking makes masses of sense. And on the back of that, you can think about expense management, you can think about digital tax submission, you can think about invoicing. There's a lot of obvious use cases that kind of sit in that ecosystem that are sort of, I guess, financial management jobs. If you think about a sort of a jobs to be done framework, like I think the client would be pretty okay with that stuff sitting together. And this isn't new thinking. I mean, Holvey probably were the first to really get on this stuff. But I remember talking to Johan when he was CEO at Holvey back in 2015 on this stuff. And everyone's kind of having a crack at it now, right? To varying degrees, which is great. And I think it hasn't taken off fully in the market, but it's such a powerful use case. If it could be cracked well, I think that will bring a lot of productivity benefits to customers. I mean, you get into questions like, does then the accounting software kind of have the whole front end, or is it kind of is the bank of the whole front end of the accounting software? Like, is it some sort of split between mobile and internet banking? There's all sorts of interesting questions around that. But I mean, the good thing for me is there's now pretty much the entire industry is focused on how do you help solve for some of those jobs to be done, which must unlock some productivity in SMEs.
So in terms of kind of digital propositions for SMEs, some of your former employers have recently launched kind of, quote unquote, greenfield on the side, standalone branded digital propositions. NatWest with Metal, HSBC I think has one.
Yep, Iceberg. I think it's yet to be named in terms of brand name, but it's Project Iceberg.
Project Iceberg, and then Santander's Asto platform. What are your thoughts based on what you've seen initially? How compelling are those propositions?
Yeah, listen, I think they're kind of aiming at a lot of the space I just described. That they're not per se accounting software integrations, but they are building in invoicing or building in expense management. I mean, you got to say there's quite a lot of similarities to a Tide or a Coconut or a Counting Up or a etc. And I think sticking something on a prepaid stack is kind of fine, and that's sort of the go-to model that Monzo used and a whole bunch of people have used thereafter, including the ones I just mentioned. I think the really interesting question for me is, how do you bring core banking into that? How do you get actually the account to have the financial services compensation scheme deposit protection behind it? So instead of, I mean, these players typically, the average balance in the account is $3,000 or so, typically, give or take. The average balance in a bank business current account is about 14, 15 grand. in the micro enterprise market. And so they're often being used as kind of secondary expense accounts because they've got great features on that. The really interesting question for me is how do you bring that together with banking? And so I don't know if you're Santander or NatWest, like what's their path to having a full bank here rather than just a prepaid card stack?
If it were you running it, what would that path be?
I don't know enough about the tech stacks. Yeah. I mean, standing up a prepaid card solution is reasonably easy. Standing up a full core bank solution is quite a bit harder. I mean, Monzo's got some amazing engineers, but it was still quite a process for them to do the full current account.
And I guess the question is always, you kind of want to extend this like existing core because you've invested so much in it, you're paying so much to maintain it, but you're kind of you recognize all the legacy issues with it, and so you kind of know that you shouldn't. Yet that's your impulse. It's costly to, implement a kind of brand new standalone core banking platform on the side for effectively a kind of a non-revenue generating entity from the perspective of the group.
So I mean, listen, I'm a total fan of the get off the planet strategy, where you do have to kind of say that the legacy from the 70s and 80s ain't really it for the long term. I mean, getting off that is damn hard because there's so much inbuilt functionality over decades on that. And I think that's where this sort of greenfield play can be an option for that. And it's only an option, but it's an option where you can start to acquire on it, you can start to build out capability. And at some point, maybe you decide that you don't acquire any more into your legacy platform, you only acquire into this for a segment of customers. And then at a point in time, you can move all the customers across to it. But that's probably like a 5-7 year journey. You don't want to rush that, and it should be an option. But like most banks have no option to get off legacy. And so having options is a great thing. But just doing a prepaid card stack is in no way enough. Like you got to think about how actually it fully fits into the proper licensed bank. But yeah, I don't think that's just about plummeting into legacy.
Yeah. So you say you're a fan of the get off the planet strategy, to use your words, and you're clearly an enlightened banker. What would your ex-co colleagues at a place like TSB or some of your former colleagues at Big Four banks in the UK feel about that strategy? How would that discussion likely go in the boardroom? Yeah. And how would your shareholders as a listed company feel about the 5 to 7 year play?
So listen, I won't comment too much on this, but we did kind of get off the planet, right? We moved platform last year off Lloyd's onto a new platform, and clearly it's damn hard to do it with a full stack bank. I guess is an observation from that, though core data and stuff and core payments did work, but a lot of channel access issues at the time. But if you are a NatWest or an HPC or a Santander, I say it's like an option. It's not a particularly expensive option. I mean, I don't know what these guys would spend on it, but my sense is you could do the business case. It doesn't have to be much more than 20-25 million quid a year to develop that option, including the core banking stack if you do it right. And it gives you the option to develop into it over time, which against the scheme of the overall profitability is not I don't think is a challenging number to be spending on an option. And strategically, if you believe the world's going kind of far more digital first, data driven, kind of you look at the cost of change on legacy and the speed of change on legacy, sort of having that option of you may be able to get to a much lower cost of change, much faster speed of change option over 5 to 7 years, I think is a pretty attractive, compelling business case. Yeah. So it depends on the mindset, but I think the reason people are doing this stuff is that belief is there. My own challenge out to people is just kind of how are you going to make a play core banking wise, not just prepaid card.
Yeah, you referenced that IT transition from the Lloyd system to the Sabadell system, which was painful for TSB. You personally haven't had a particularly easy ride since you've joined TSB, which feels so unfair, knowing you and knowing the kind of background and pedigree that you bring to all this. But it does sound from the conversations that we've had like the proposition that you guys are developing internally for the SME space. It gives you potentially a lot to play with. You mentioned brand before and the strength of brand recognition for TSB. I mean, as you're communicating with the types of SME customers that you're looking to kind of groom as part of this long-term business banking development strategy, I mean, how deep is that brand equity, and to what extent was it able to kind of help blunt some of the technical issues last year?
Yeah, listen, I think you got to look at the market I said there's many segments, but let's call it two for now, like the real micro segment, which is the volume 4.5 million customers, and then your kind of slightly larger businesses above that. For the larger businesses, the brand is people know it, but it hasn't been doing business banking really since probably the 90s, when kind of Lloyd's merged into it and so on. So I think there's more room to do to really establish that. And a lot of that is actually about people on the ground talking to that 5 million turnover business, that local accountant that covers the 5 million turnover business, and so on. I think in the micro space, where there's a lot of crossover of brand with the personal space, I mean, we track this stuff, and we have the sixth highest sort of consideration for business current account in the market in the UK. You can guess who the top five are. It's the big five. And we have actually, I think, the fourth lowest rejection rate for business current account amongst that micro enterprise segment, which is an amazing asset. And I think it comes back to the fact that, like, the brand's 200 years old. The classic business owners, like in their 40s, they sort of grew up with TSB as an independent entity, maybe have a student account there or whatever. And there's quite a bit of underlying resonance out there for it, even though we haven't been actually out there in the business space for the last 4 years since we separated from Lloyd's. But we have done a lot on the personal side, a lot of advertising spend there, a lot of emphasis on our local branches, the people in the branches.
Actually, yeah. So you mentioned people a couple times, and of course the branch network gives you an advantage if positioned correctly vis-a-vis digital-only banks. To what extent? So we've talked about the advantages of being digital. So to what extent is the human touch relevant in SME banking?
I think hugely so. And that's not always has to be face-to-face. I think it can be on a phone, could be on VC, could be on web chat. But there is still something about face-to-face that people do like. I mean, if you look at surveys of why people choose a bank, one of the three factors is always local presence near me, be that RM or be that a branch. And so I think people want that human factor. I think because no one really gets into a business because they're an FD and they love doing the banking. And there's a bit of a fear of the unknown and complexity, and they want to be able to look someone in the eye, basically, if they've got, I don't know, they want to borrow 400 grand for the first time to buy a new premise for their business, and they've never done it before, and they kind of want to have someone help them through that. Some of that trust has been damaged in the last 10 years in banking, sadly, and I think really committing to look after and be fair to borrowers is key, because it is a real moment of truth and moment of trust. But I think that there is definitely an ongoing desire for some personal touch, and any of the research says that's higher in business than it is in personal. Though again, it does matter in personal. I think we see actually huge positive feedback on our branches and the people we have in our branches, who I've got to say, having worked in a number of banks, the customer focus they bring is actually, I've not seen it before. There's something different there in terms of ethos and values, and that is it is powerful when you experience it firsthand. Actually,
yeah. I want to switch gears a little bit and pick up on something that's always kind of stood out to me about you, which is your support of kind of the broader FinTech ecosystem. As an advisor, so we have contacts in common whose companies you advise, and they tirelessly tell me how supportive you are, how generous you are with your time, and on occasion with your capital also. I think you made some investments in some early stage companies, one of which actually is an SME banking focused digital play called Penta, who are based in Berlin. You've probably talked to them more recently than I have. What's their latest?
Yeah, and listen, so kind of rightly or wrongly, I just love this industry. I love this space. I love people that want to improve the lives of small business customers, which is kind of what drives me. And so, if anyone kind of reaches out with something interesting, then always happy to spend time with them. And yeah, if it's really good, I might put some money in it as well. And I mean, Penta was one of those actually. Lav, who's the CEO, and Luca, who's
Lav's been on the podcast actually.
Yeah, I mean, amazing
Years
guys,
ago, probably.
Amazing guys. So energetic, kind of so focused on getting things done, but with the right kind of values as well. But I think they're doing well. I think they're seeing pretty good customer traction kind of ahead of their plans. And I think they're kind of looking at sort of where do they go next in terms of funding and that sort of stuff to really keep the scaling up the business going. But from what I hear, the feedback from a sort of customer side on the proposition is pretty strong, and they're exceeding their acquisition plans, which is always a good sign. So, no, a huge amount of time for them, and wish them all success.
Excellent. So, taking a step back, I guess, and putting on your investor hat, what are you most excited about in FinTech?
Yeah, I mean, listen, I've got a bit skeptical right now because there's so many things out there, and sadly, so few will succeed. I think the kind of easy days are starting to disappear a bit in FinTech, where clearly some early sort of visionaries have kind of managed to get good scale. And it's always kind of harder coming behind that. So for me, it's about really picking something you know well and kind of a really clear route to disrupt. I mean, there's a company I invested in recently called the company's called Integralix. The product's kind of in the FX space. I won't say too much because it's kind of under wraps right now. There is a website you can go and check out, but it won't tell you too much. But I mean, that is an open banking FX play, which I think is the best open banking play I have seen out there in the market. There's a lot of Me Too open banking stuff out there. But this one is people who properly know what they're doing at the heart of both of what open banking allows you to do and kind of the FX business, and combining it with a great sort of customer-focused proposition. And I think that sort of, that expertise thing, kind of market, addressable market, and ability to disrupt that is so important. And you kind of suddenly see that come together. And I mean, with this company, the seed round was amazing. I've never seen such a kind of great investor base, and like actually there was also kind of a non-angel investor participating well quite substantially. It was just amazing. So when you can see the stars align and someone's got a really great idea, boom, it just happens. There's a lot of average stuff that kind of really struggles with funding because it's just very copyable, or kind of someone's doing it already, or so I think really want to see more of those kind of amazing ideas. Wish I had some myself, to be honest.
So maybe great question to end on then is, will the future of financial innovation, FinTech, sit with startups or incumbents?
It's got to be both, right? I mean, it's something I'm massively passionate about, is trying to bring FinTech and bank together. Hopefully done okay here. I mean, in the 12 months since I joined, I mentioned Enterprise Nation, I mentioned Square, but we've also done funding options. So we have funding options now embedded in our website. Only high street bank to have like a lending marketplace on our website. We've worked with Xero to do our onboarding journey. We've got GDeal under our onboarding journey. We've got Gmeo. So we've kind of done a bunch of stuff in like 12 months, kind of probably faster than most. And like, there is something really, really important about your ability to partner with fintechs as a bank, and something I'm really passionate about, and like has not been cracked in the industry.
This seems like a kind of another way of saying, if banks do it right, then they can capture a significant amount of the value that fintech brings to all this, right? So it's
but it's that kind of fintechs need reach, right? Generally, and a lot of the fintechs are named actually what they're really doing is trying to supply to banks anyway, rather than trying to be front end themselves. But it's not like funding options; they want as much reach as possible. And banks can't build everything themselves. No way, impossible. Even if it's in banking itself, you can't build all your banking services to be amazing yourself. And outside of core banking, like if you think you can build all the non-banking stuff yourself, well, you're completely kidding yourself because it's not what you do. So for me, there's a massive role for partnering there. And some fintechs will take on the banks direct, and that provides choice in the market. And if they've got a targeted proposition for a segment, they'll do well. Some fintechs will partner with banks for reach, and some fintechs are supplying services into banks underneath it all. And I think that ecosystem is great. I think just the frustration, I think, for everyone is the capabilities to partner there, be it from a procurement point of view, from a legal point of view, from a compliance point of view, from a technology point of view, like on both sides are immature generally. So it takes kind of the right people on both sides to make this thing actually happen right now. And people have got to kind of industrialize that a bit more if they really want to sort of have proper ecosystems.
The one part you can't automate, I guess.
Yeah, completely. And it's just challenging, right? If your procurement system was designed to bring on IBM on board, it's sort of tough when it's a 2-year-old startup with you kind of run it through your D&B credit score and it's pretty horrific and etc. So there's a bunch of stuff there which I think does need senior management, senior exec kind of sponsorship. And equally, fintechs need to be savvy to the fact that conduct risk, financial crime risk, operational risk, they are real things. And people at banks go to jail. Yeah. And so if you're coming in there not having thought about that stuff, you aren't going to go very far, very fast, even if your proposition is amazing. So there's kind of a maturity thing on both sides, I'd say. But yeah, the best thing, right, is just this is all happening right now. And what an exciting time to work in financial services. I remember I was head of strategy at Barclays Commercial Bank in 2007. It was just dull. Like strategy was...
That didn't last very long, though.
No, it got, for bad reasons, it got more exciting, right? But it just dull. Like the strategy was like, where should we put some more commercial banking offices? Like, should we expand our sort of risk appetite in these sectors? Which is still core topics, but like it's only so far you can go for those questions and how often you want to iterate them. Whereas now, like there's so many interesting things out there around proposition, partnerships, API-led strategies. I think it's just such an exciting time to work in the industry. I
totally agree with you. Even in the shorter term, it'll be interesting to see how pools B, C, and D shake out of this RBS package. Who knows? Maybe we'll catch up at some point to recap once it's all said and done for an update down the road. Certainly wish you and TSB all the best. Richard Davies, thank you very much for joining us today.
Thanks, Will. Great to talk.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.